Hi, everybody. I'm Dr. Laurie Davis, and you are listening to the Dr. Laurie Davis Show, streaming live right now on E360 TV and also streaming live on Self Worth the Missing Link Superstars Facebook page and also on our YouTube page. And when you go to YouTube, just search Laurie Davis Show host and you'll see the show. So I know right now I have clients, in house clients right now, and they're busy on the other side of my building watching our show on the big screen TV. So happy to have Ramin back with me because on Tuesdays, it's all about our relationship with finance, our relationship with money. So, Ramin, welcome to the show. I love having you as a co host.
Thank you so much. As always, it's a pleasure to be here. I really enjoy our time here together.
Cool. So last week we talked about what is money.
Right.
And I think we did a really great overview for our listeners. If you didn't see that show, then just go into E360 TV, search the Dr. Laurie Davis show, and that episode will come up and you can get to replay it for yourself or for others if you think there are other people out there who could use our information. So, Ramin, what have you got on the docket for today? Because this is about you and what you want to share, and I'll just kind of play along and put my piece in there. So, what is it today that you really wanted to focus on?
I thought it might be a good natural progress going from money to something even more exciting. It's about what is investing, the investment. People get excited, everyone you talk to, obviously, it has that aura about it that we all want to have a better life. So I thought we'll have a little journey in actually what it is and go a little outside the box to explore these different meanings to it. So that was
Beautiful.
the topic.
Well, I was offered an investment opportunity yesterday, just yesterday. And our network, E360 TV, just crossed over the $1 million mark for viewers. And even though we might be the new kids on the block, that is a major accomplishment. And so I had a meeting with our network and they talked about what they need to do to expand and make things better. They've signed on 60 new hosts in the last 3 months. And that's big. And a lot of them are inexperienced and maybe don't really know the ropes. And so I see that as a huge opportunity for us to be able to mentor new hosts. And so yeah, so there's an investment opportunity there. Kind of, I think it would be considered penny stock. I'm not sure, but you can help us with that. So there are many opportunities that come across our plate for investing. So over to you for just maybe a definition of, what is investing? What does that mean? And I know it doesn't only just mean money, but let's have you share the money side, and then maybe I can talk about other investments that go along with that.
Okay. Well, actually, yeah, that's a big part of what you will discuss because really investment or investing is any source that will create and also help to grow your wealth. So the misconception that we have, you precisely mentioned, we focus on more on the financial side, and but in reality, you have two types of investing. One is the human; we call them human capital or human investment, and the other side is the financial side. So, as a matter of fact, I was just going to actually, I might uh, cross over to your territory, but it's very
That's
important
okay.
because it is the
That's okay.
human capital is a very important one. So I will start with that, which could be, when we look at it, it could be education, going to university, self-improvement. That's something that people don't realize that is as important, if not more important, than the financial side of things. As a matter of fact, the old saying, Benjamin Franklin had said, investing in knowledge pays the highest or the best interest. So I'll share a little story about that and then maybe we can have a discussion. about just my own experience, why this, again, talking about the human investment, human capital, has really helped me throughout my life. As you know, I came to this country. I was a junior in high school, so I spent my senior in high school in the United States. My English grammar was good, but my conversational English was like a 3-year-old. I mean, it was very difficult to communicate, and so basically, I went to senior in high school. I had to take all these courses, including physiology and English, and I had to take calculus. And calculus was the best one, so I started with that. That really helped me, obviously, come over my shyness, and gave me that confidence. And the system of education, unfortunately, is very different in the United States than where we grew up. There is a lot of deep learning in, with the calculus, for instance. You don't have the answers at the end of the chapter, so you don't start from the end, come to the beginning. You really have to be a problem solver. So that really helped me. The second thing was, as a youngster, I really loved books, and I read classic books, and philosophy, and all kinds of science books. So when I went to English class, I couldn't communicate, but all the projects that they gave us, I already had read them in my own language. So it was a lot easier to comprehend. And the third thing that I think, again, talking about investment, is my English teacher taught me, because I was taking physiology, just gave me a couple of pages of suffixes and prefixes of Latin and Greek suffixes and prefixes.
Oh,
Tremendously helped me with my physiology. My first grade in physiology, I got 22 out of 100. I finished the class 91 average. It was 10 points higher than anyone else in that class. So little things like this, that's an investment. So that's what I look at it. So when we go from that point, let's talk about the financial side. And even with the financial side, you have different categories. With the financial side, there are assets that you actually own. So you have the ownership. For instance, well, the first thing comes in mind is like real estate. So real estate is an investment, but people own stocks. They're a part owner of that company. But also you could have precious metals, you could have collectibles, you could have currencies. But also nowadays is the cryptocurrencies. So you actually have the part ownership of that. The second part is you don't have the ownership. It's more of a debt side of things. You actually, people owe you and they will pay interest. So that's a form of investment. That could be long-term bonds, notes. And there are times that savings account fall in that category. Then those savings accounts, when you think about or checking account, really, you look back 100 years, they really haven't kept up with inflation. So they're not really investments. At least they have a steady growth. And then the third part of the investment part is things that they derive from these assets. They by themselves don't have any value. We call them derivatives. And derivatives like options, we talk about futures. You don't really own something, but it's a vehicle that you could speculate, for instance. So you don't own anything, but it's more for the day trading. The last part will be kind of a hybrid of the human capital and financial capital, and that's about entrepreneurship and being a business owner. At that sense, you should have some kind of a financial investment, but it's all about you. And that's what is such a challenging thing for a lot of entrepreneurs to succeed, because it's a lot about our human side of things doing, and especially you have to be a self-starter. But I want to share a story about the 400 billionaires in Forbes 400 billionaires. Believe it or not, 69% of them, they were self-starter and they were really business owners. That's how you make
wow.
69%. So we're 270 plus. So in a nutshell, that's what investment should be looked at. It's not just, oh, okay, I got a stock or real estate, I'm an investor. There's a lot of other things you could focus on. And I emphasize again,
Wow.
self-side.
Wow. So how would you think that the other sort of investments outside of money. So, like, for example, if we invest in a friendship, or we invest in an idea, or we invest our time, you hear a lot of people say time is money. How many hours have we wasted when we could have been investing our time, an investment of our energy, our focus, our vision, our mission? I mean, there's so many. I mean, for me in the last year, I've invested big time in my health to
Right.
make sure that I stay well so I can continue to do the things that I want to do. And that's paid off big time. I have a doctor's appointment on Wednesday, and she's not going to find a thing wrong with me. I know it.
Yeah. Awesome.
Or excuse me, the 5th of July. So, there are many places we can invest in our family, our kids, our family relations. Um, and there's so many aspects to investing. And I would say, now I'm going to go out on a limb here, and you can, put your feedback or input, whatever. Um, I believe that when we invest in those things that really matter, then when it comes to investing money, that's like it should be a no-brainer. What do you think about that?
No, that's such a um, valid point. It goes back to definition of wealth. I mean, we are very much narrowed, boxed in. Wealth is about money. Actually, that money wealth is supposed to create the other wealth. You're talking about time, talking about relationships. It's supposed to allow you to build on those. So again, once we narrow the definition, unfortunately, then the focus of even success becomes in that. So you can sacrifice 90% of the other wealth to accumulate the 10% wealth, which hurts everything else that you're striving at. And it is totally, that is the wrong focus. So it's about balanced life and basically like precisely when you think about health and you're talking about family relationships, you're talking about again network of the people that we are in. And money, last week we talked about, is the tool, and that's what our objective is, to use that tool to achieve the bigger picture, the bigger vision. So
Mhm.
no, that's a very good point. And talking about
Well, I'm just drawing that summary from the fact, or that narrative from the fact that I moved to Alberta, Canada, in 2008,
mhm,
and I'm from the East Coast. And on the East Coast, we work hard, we play hard. But when I got to Alberta, I went, whoa! It was like a culture shock because, of course, we are derived from the oil and gas industry plus agriculture, big ranches, big farms, thousands of acres. And what I recognized right away was there was lots of money. People were after the buck and they worked really hard. So they bought their RV and they bought their beautiful boat and they bought their big, home. But they didn't have the time to enjoy the luxuries that they were able to purchase. So I thought, well, you've got a beautiful boat, but you never get to go on it. Like, what's the deal? Or, you've got this big, beautiful home and you don't even know how to take care of it. You've got, so how does that work? Like, would that be an out of the balance investment kind of lifestyle?
yes, I mean, absolutely. Again, what is the purpose of whatever we're doing, working hard, or what is the end results? I mean, is the quality time spending with our children, for instance, or with our family members? Is it a reason, or do we want to sacrifice that to get to a point that now we are in late stage of our lives, losing our health, and now there's an old saying, I use all my health to accumulate wealth, and now I'm using all that wealth to regain my health. So,
Oh,
what is the purpose again, right? So we have to put things in perspective, and I think I might have used this quote before. I'd rather live rich life when I'm alive and be poor when I'm dead, rather than be poor when I'm alive and be rich when I'm dead. So we have to balance that. And again, totally, it's all about the definition of wealth. I want to give a little tidbit. Again, I like to look
Yeah,
back,
for sure.
talking about money. The richest person in the history, when we think about, some people think about Rockefellers, and now it's like Elon Musk and Stephen Jobs. But the richest ever in the history, the person was Mansa Musa. He was the emperor of Mali in Africa in 1312. And his wealth in today's dollars would be $400 billion. They own
Whoa.
400 billion. And that, so his empire owned 50% of the world gold. So it was gold and salt. That was their wealth. He was a good emperor and a very giving, so he was very much believed in literature, education, architecture, and art. So he did a lot in Mali. But one thing goes back last we talked about scarcity. He was so giving. He was going to Mecca in Saudi Arabia, and on the way from Egypt, he took tons and tons of gold with him, the camels, the slaves, and he gave these gold to all the people in Egypt. Now, you would think this is such a um, unselfish thing that he did, but very gracious. But that ruined the economy of Egypt. When you have too much of something, then it's not worth it. So people who had a little bit of gold, they lost the value of it with just so much gold in there. It's almost like our central banks here. They kept printing money. So when you print so much money, it's not worth it. And that's why inflation. But he was a giving person. And that's just a little tidbit about Mansa Musa, just I thought to share with you.
Mhm.
So
Well,
anyway.
that reminds me of a story about J.D. Rockefeller also,
Mhm.
who owned the Waldorf Astoria
Right.
hotel restaurant in New York City, Manhattan. And he said, he was in his limousine and he had his driver. And he also at the time had stomach cancer. And so they drive up to the front of the hotel and he says to his driver, I own all of this, but I cannot go in and have a nice steak for dinner because of my cancer. Like, how crazy is that? I own the restaurant, I own the building, but yet I can't do that.
Yeah. Yeah.
I know,
That's so
right?
true. Yeah.
Right. So, right now in our world, as we've seen it post COVID and et cetera, do you want to give us a little insight onto, what is a good investment right now, monetarily? What is it that a person could invest in? I remember one time reading in Fortune 500 that the best investment you can make, and this is important for us right now too, because we're on the front end of something big. The best investment you can make is in a company that has a track record, but they're on the front end of a huge expansion. Would you like to elaborate on that? Do you agree with that? Is that for real, or was that just an article in Fortune 500? Like they said, and this was probably about 10 years ago, I would say that I read that, but your best investment is in a company that has a track record, they have a foundation, but they're on the front end of a huge expansion, which would explain Facebook and Microsoft. And I mean, if you'd seen a picture of Bill Gates and his cronies back in 1978, I don't think I would have invested in them.
Nah.
So, what do you know about that, Ramin? What's
No,
right now,
one of the biggest attraction about the United States and Canada, specifically United States, again, a lot of innovators come to this country because of the opportunities they have. I did actually, after the COVID happened, one of the classes I have or my workshops that I do on Saturdays. we weren't really worried because we thought during every challenge, there's opportunities. And the opportunity at that time was innovation. COVID created that challenge, but also created a need to come with a solution. So every stage of human history, and we go back to the, like say, beginning of the 20th century, the Industrial Revolution, and we talk about cars, and then we go to electronics, and then of course in 1990s we had internet, which has brought the world together. Now we've had these ebbs and flows, and basically now the biggest talk is about artificial intelligence. You think about biotechnology. So all of these, they have really revolutionized, and every one of them, and why we have like a Microsoft and not 10 other companies, because they were in the forefront of this idea and they took the risk. So that brings me to, when you're in looking at investing, there are two most important considerations you have to take a look at. Number one, how much risk you're taking and what reward you're going to get. So it's all about the balance of that risk and reward. So if, going back to what you said, if there is a track record, if there is the potential for receiving much more reward than what I'm risking, then it's worth it. But if it's the other way and I'm taking as much risk as I'm going to get back, you got to be pretty cautious. So it's all about, again, the ratio. So when you're coming, I mean, forefront of, we go back to artificial intelligence now because it's a hot topic. Uh, there were companies that they were forefront. I will give you one name, like for instance, NVIDIA has been, exploding, and basically because they did have that track record and they are a pioneer. And like the same thing with Adobe or Microsoft, excuse me. Oh.
It's okay.
But live TV.
No worries. You just keep talking.
Yes. So those are the 2 points. Again, I emphasize risk.
There must be something choking you up there. I'll be right back. You just keep talking.
I'm sorry. So if you are getting involved again with any type of investments, and when we talk about investing, we just talked about time. Now, if I have my time is a very valuable commodity. So basically, if I'm spending that time, even if you're doing it for fun, well, fun is great, but up to a limit. So anything that gets exaggerated, it becomes very low efficient, and basically spending time in the social events or spending time in even too much exercise, for instance, when you're exercising so much, everything should be in balance. So again, with anything else, we look at how much, again, I'm risk taking and what is the outcome and what am I going to get out of it. So even having fun, it is an investment because it balances you out, it stresses out. But when too much of that takes away from other parts, then that was a lot of risk you took. Having said that, they are, when you're looking, going to look at like the ideal investments, and again, it could be in different avenues you can take a look at. There's 5 things you have to think about, and I'm looking at more on the financial side. So you ask about the company, whether it is looking at penny stocks or looking at small companies, or looking at commodities. First, you have to look at the capital that you have, how much money you have. and how much of that money is available for this investment. The second thing you have to look at is your time horizon. Is this for the long term? Are you looking at the short term? So, how long will you hold this? Obviously, because of the volatility in different asset classes, such as like real estate, most of the time, real estate has its own cycle. So, you got to be patient. Some of the stocks the same way, but some other assets, they are more short term. So, you got to look at the time horizon. The third thing to look at is the liquidity needs. You got to look at, well, how soon do I need this money? As far as because I need income, do I need how is it first of all liquid? Can I turn it to cash? So that's also allows you to balance that risk and reward. The fourth thing is the taxes. Taxes are very important, especially again in North America. So is there a way that I am in an investment that allows me to have less of a tax burden? So I'm willing to hold on to it and basically pay less or even no taxes. So it's worth it because you always want to look at things net net. But the most important thing at the end, I would have to say, the fifth thing is your personality traits. We cannot escape that. Am I a risk taker? Am I patient? Am I decisive? Am I conservative? So these are the things we look at. For instance, somebody who is an investor and wants to be a trader, which is very short-term oriented, the trading, you have a lot of volatility. So at that time, you cannot be patient in a sense. When the opportunity comes, you got to make that decision and jump in it. So that takes a very decisive characteristic. If you're investing in something for a long term, then you can be patient and say, well, okay, I got it because I have a long term horizon. I don't have to worry about these ebbs and flows. So I'm okay. So those are the important things. So watch who you are. It's important to do, again, a little self analysis. And also based on that, it allows you to choose what kind of investments you want to get involved, whether you want to be options, you want to do real estate, gold, you want to do stocks. What kind of stocks? Do you like the fancy, exciting, exotic stocks, or you want to be like steady, dividend paying stocks? So that's the next, I think it's very important to help to choose your investments.
Mhm.
Yeah. So,
So, what would be your opinion? I've got a little funny story to share
yeah,
around
please.
this, but um, many years ago, I was making a lot of money, and my banker said, you should really find a financial advisor and help you build a portfolio. And of course, back then, I didn't really know much, so I thought, yeah, I need help. So I contacted the reference, the person that they gave to me, and anyway, he arrived at my home. He was just a young man. He was just a kid, really, and he, and this might not have been a good criteria to evaluate whether or not he'd be a good person for me. But just talking about a lot of people don't have the confidence to do their own investing, or they don't have the confidence to know what to do. Let's say if they've got 10 grand and it's sitting in their bank account collecting 1%, or here in Canada it's 1.5 or 2, and they want to take that money and do something with it. So that was the position I was in at the time. And it was more than 10 grand that I had at the time to do that. So they send me out this young guy, and he's been in the business about 3 months, and and I said, I've got X amount of dollars. I need to do something with it. And I said, so before I even started, I said to him, so what is your net worth? And of course, he didn't have any because he was just young and he was just starting out. And I thought, well, I don't know if I want this guy managing my money because he doesn't have any experience. And I thought I could do a better job than that. So let's talk a little bit about how we need to make sure we have the right people taking care of our money. And I have another friend who has a lot of money, but just even from the little bit that I know and what I know compared to you is in a thimble, she's making some really poor decisions. So, how would you counsel people on how to find, if they don't feel confident themselves to invest, what should we be looking for in someone that we're going to hand that responsibility over to?
That's a very valid but also a good story. I'll share my own again, how I started in the business. And I was a new person in the business. I always say I had no business being in finance. So I was 22 years old when I started. Um, I was an actor. I hated it, and ended up, I was being a soccer coach, and I started this. And I really never taken any finance course. What I did, I just learned things on my own. But again, when you're working with a company, they give you their guidelines. The thing was, I was determined that I'm going to do the right thing and I'm going to learn as much as possible. And one of my first clients, that we played soccer. I was an avid soccer fan. I played soccer, and our team always played against each other, and they were ex-British professional players, and we beat everyone. We lose to them big time every final, and they could have a beer in their hand and not move, and they still beat us. I mean, that's how good they were. So one of them was newlywed, and he came to me and they gave me, for me, like you just mentioned, 10,000. This is 1985, and he gave me that 10,000 and said, "Oh, Ramin, I hear because of the soccer, we had this again, connection." And I really didn't know. But what I did, I intended to find the best place. So I just didn't go ask someone, "Oh, where do I put it?" I looked at the economy, and the bull market was just starting. Interest rates were going down. And I want to be defensive. My whole thing, I've always been conservative. So I put that money in utilities. And lo and behold, by end of the year, his first year, he was up 25.2%. And he thought I'm genius. But I wasn't. I didn't have a net worth. I did okay because I worked all my life, basically being here since I was at school. So I had done okay, didn't have any debts or anything. But I didn't have a lot of money myself. I was just finding myself. But I had the right intention, and I was looking for the right answers. So sometimes just being young, we do not discount that, but we don't want parrots. We want people who don't just copycat everyone else. We want initiator. And because of what I did for him, he started actually calling his friends. So there was this pressure and burden on me that I had to be the best. And that's when I just went and I got any degree that I could get, and I started trading, after that myself because I want to learn to swim myself too. So I agree with you. Again, I just don't want to hold it against someone if they're young because they have to start get the experience from somewhere. But I will be cautious because we want to see if this person is going to be there a month down the road. Forget about a year. I mean, so you do have these turnovers. What company they're representing? Are they really investing? Goes back to our investments. Are they investing in themselves, education wise? You'll be surprised. Some of the most successful soccer coaches, for instance, or the coaches, they were not the greatest players. A lot of great players, they end up not being very good coach either. So it's all about the skills. Some people have that educational communicative skills. So there's a lot of different things, but you're right. I mean, again, life has again this ups and downs. But if after all these years they haven't been successful, then you got to be cautious. Um, but also, again, it is your well-being. They're number one, and it goes back to the question of ethics. Is that number one priority for them? So,
Mhm.
so it's about education, about their intention, about their commitment, about themselves. Again, how do they see? Are they confident, like you just mentioned? So, um, you could know some little thing, but you're very confident that you learned the right thing, and that's what you want to share. And That's how
Yes.
I would look at it.
The other, that reminds me of something that I share with clients all the time is just because you know how to play a great game of golf doesn't mean you know how to teach someone else how to play a
That's
great game of golf, because that's a whole different skill set, right?
correct. Correct.
So I could be, a multimillionaire, but I may not be able to teach you how to be one,
Correct.
right?
Absolutely.
So yeah, so
I share
that's
another story with you. I have a good
yeah.
friend. He's one of the most successful traders in the United States, and they've written books about him. And a brilliant mind. And he is, I mean, he's lost tons of money, and that's we learn lessons from our failures and losses than what we have gained. I mean, he sits at when he would come to my classes, talk to my students. He would share about how in 3 days he lost 8.7 million and how what was going in his head. And he said he went, walked around Central Park, came back and lost another 3+ million to revenge. It's like and ended up losing 12.5 million. But one of the things he's shared with me. He says, Ramin, I'll talk to the students. I tell them everything that I know, but I cannot take my brain and put it in their head because of, again, all uh, our backgrounds, all the biases that we have, our upbringing, everything plays a role. Another story I will share, and again, I share it with my students, is if we had the central bank, the president of central bank in the United States, the Fed chairman, sat with us right this second, and he said, "You know what? I'm gonna raise the rates tomorrow by 50 basis points, 50.5%." You would take one direction, and I might take another direction. It's all about our perception. So you have the facts. He told us this is what he's gonna do. That's a fact. But because of my attitude, and I'm thinking, oh, if he's doing that, oh, basically that means the inflation is still difficult, and I'm gonna make sure that I sell the markets. You would say, well, he thinks the economy is really healthy. He thinks that we have a good employment. I'm gonna go buy the stock. So both of us, we hear the same story but reacted completely differently. So it's a lot about our own traits again, and our again what biases that we have as an investor, as a person, and that makes a big difference. So
Well,
I hope that's helpful.
wow. Yes, absolutely. Recently, you and I came up with an idea that, you know, there's a big connection between self-worth and net worth.
Yes.
And this is an area where you and I have collaborated, and we are going to help educate people uh, how that there's a big connection there. And as far as I know, we're the only ones that have made the connection so far. So let's talk about our project for a few minutes and just put that out there, because part of what my purpose in doing a show, and I met with my network yesterday. We're going to be expanding the show to four at least live broadcasts a week, Monday to Thursday. We're going to divide the show into segments. So Monday will be our VIP show, which is Voices of Indigenous People, and I will always have somebody on there from the Indigenous community speaking with us. Tuesday is you, our financial expert. Wednesday, we bring in our experts in wellness. And Thursday is kind of miscellaneous, authors, celebrities, athletes, whatever. And so health and wealth and network and self-worth, this is all so very connected. So coming from your background as a financial expert, what have you come to see in that area with regards to people either investing or getting information or becoming their own portfolio manager, whatever? So, what do you know about, or what have you come to realize about the connections there?
Mm. You're absolutely right. They're very much connected. But what we found out is, having the net worth. does not translate to self-worth, but self-worth generally translates to net worth. And that's again the definition of wealth. So you can see there are a lot of people who, whether they got fortunate, because when it comes to investing, and I would just use sometimes real estate because of the timing, or people who did the cryptocurrencies, they just dabble and all of a sudden they have, 1,000 multiples or whatever they invested in. It was not really, it was by game of chance. So, or you precisely have mentioned in the past, like lottery winners. Well, lottery winner has a net worth and has all this money. And we talk about athletes, we have a lot, singers, musicians. They end up having that net worth, but eventually somehow the majority of them, they lose it because they don't have that self-worth. But once you have that self-worth, you can always capable, you can be in a desert, you can be on a boat in the middle of the ocean, you can be anywhere because of the confidence and knowing who you are, you can make things happen. So there is a big connection, but I will go more directed to one side of things than the other side. And that brings us to our project, the 100 Shades of Prosperity. They go hand in hand. And that goes to the balance. A lot of times, again, some people, there's an old saying, rich gets richer because they have that capital. And I have a good friend who is an option trader, and he was bragging how he made a trade. And, that trade he made like, I think that was the biggest trade. He made like $12.5 million on a Tesla option. Well, he didn't tell us that, he had $10 million capital to make that. I mean, if he was like a 10,000 and you made it that's huge. So the capital allows you to take more risks. So, I mean, he had the both. He had the self-worth and net worth. So generally, I mean, it's good to have the money, but that doesn't mean that makes you successful and you will continue keeping that. So if you see a lot of successful people who have increased their net worths because they have accepted their self-worth and they know who they are. I always have these stories. I got to share another story again that
Yeah, sure.
we had there was this young man in Texas. There was like the hum days of the this is right during the financial crisis, right before that, right around that time, and the oil was going up. He inherited $100 million, and
Wow.
100 million. A young man, I don't think he was in his 20s. So he goes and bets against Apple at that time, and he said, "Well, Apple is too expensive," and he kept losing money. So it was 100 million, then it became 90 million, and he would not pull the trigger because he thought that's a failure. How is he gonna face his family? Oh, I'm a loser. And my friend was, his advice. He kept saying, "You got to sell. You got to get out of it. Okay, you lost 15, 20 million. At least you have 80 million." He goes, "No, because this was money that he really didn't deserve it in a way. It wasn't his money." To make it short, again, it goes back to your own self actualization and who you are. When he got out after all this pain, he ended up leaving $2 million when he's finally sold, or not sold. He was shorting the Apple once he bought it back, in a sense, and he ended up from 100 million. He said got to 2 million, but on the surface, he's still a millionaire. So we can say, oh, he has a million, $2 million, but he lost $98 million being stubborn, not accepting the responsibility, and so obviously there was no self-worth in that, but it was given to him. So of course, it affected the rest of his life, and he never touched money, investing again because of that. But yeah, these are real stories that happens every day, and
Hmm.
because of lack
Well,
of
being,
appreciation of money, what it
yeah,
really is. Yeah.
yeah. Well, just being, like you've mentioned too today in the show, being out of balance, not putting things into perspective, not taking responsibility. And we know many, many, many stories of people who had everything. I'm one of them. I had everything, I lost it, got it all back, lost it a second time, and now getting it back. This time I'm not going to lose it. But there were so many issues that were attached to that. And one of them was not feeling that I deserved to be successful and that I didn't deserve to be wealthy. And I had no idea that that's what it was, because I was a hard worker and I was ambitious, and I took and, invested countless numbers of hours into my job and into my business. And even on a personal note, into my failed relationships. And that didn't work out. Now, why was that? So it was like, oh my gosh, there's something not right here, and I have to figure it out. But you're so right. And how many of our celebrities have, oh my gosh, we can't even begin to name them, earned tons of money and died in poverty. And Elvis would be a good example of that. And, Michael Jackson was pretty close to that. And so we have lots of lessons. We have lots of people who came before us to, exemplify that. So yeah, and I, I've had wealthy friends who lived like they were on welfare,
Yeah,
right? They have millions of dollars in the bank and they're living in this little ratty part of town in a little one-bedroom apartment and don't want to buy anything new and hoard things. And of course, maybe that's another show we can do, the difference between a prosperity mentality and a poverty mentality, which absolutely has nothing to do with money,
money, absolutely.
right? We can have a prosperity mentality, not have any money in the bank. So
Absolutely.
that's another show, Ramin.
Yeah, no. I mean, that's what it's good. The workshop that we put together, 100 Shades of Prosperity, brings everything together from A to
Right.
Z. So basically, it allows you, start the foundation, because then we find out the whys and why we are this way. And once we clear that, it's so much easier. I mean, it accelerates, and it's exponential growth rather than
Hmm.
uh, arithmetic growth. It's like it is important to understand where all these issues come from, and I think that's what I think is so powerful. You don't. I mean, there are books about psychology of trading, and there's some great people, but it's a very specific, especially about trading in our background. But when it comes to totality, I don't think there's anything. The
Hmm.
combination of the mechanical and hard facts with the soft skills and
Hmm.
understanding who you are, which is that's the most important, finding who you are. And that's what I really enjoy working with teens, because they haven't developed that
Yes.
biases, the masks that we all wear, like 20, 30 of them. I kept telling them, by the time you get to my age, we spent 100 times of what we did to go to therapists to just shave these masks off to get to who we were at your age. So you got that luxury to learn now not to have those and be who you are and be authentic.
Absolutely.
You're so blessed to have that. So that's why it helps.
Yeah. And of course, if you think about it, Ramin, when we were young, you're younger than I am, but when we were young, um, information like we're sharing was not available.
Yeah,
Nobody knew anything about self-worth back then. As a matter of fact, when I was a young school teacher in the system, we the word self-esteem, self-worth wasn't even in our vocabulary. We didn't get any training on recognizing when that might not be in place. And the same with finance. Many of us have thought that financial information was only privileged to the wealthy.
absolutely.
And what we want to do is bring those things together so that the average bear out there can have access to the information that has been, uh, I don't know what's the word, not hidden exactly, but people left feeling that they weren't worthy of accessing that, or maybe the good information was held captive or held secret. I have a young client here with me right now, and he and I watched a movie this morning, and it was on vision, planning, and performance. One of our films that we have in our product line called The Opus. And he looked at me and he said, "Where and when would I have ever been able to access this?" All about vision building for a 29-year-old. He said, "I know anything about this." So it's good information that's been held hostage. What do you know about that from
Yeah.
the financial perspective?
Well, one of the things you have to remember, a lot of large corporations, I don't want to name names, but big brokerage firms, investment firms, obviously they look for where is the most lucrative place to go. And it's not the average person. They look at the net worth of millions because that's where they make the most money. So they concentrate on that. So that's another reason they have been,
Oh,
privileged in a sense. So we thank God for all this information out there. The problem I run into with this social media and access to a lot of information is I always believe little knowledge is more dangerous than no knowledge. So ignorance is sometimes is a bliss because if I don't know it and I won't do anything. It's like building a
mhm.
dynamite or it's building a bomb. If I don't, I'm gonna kill myself. So these bits and pieces, whether it's on the YouTube, whether it is on TikTok, people get these bits and pieces and they think they're experts. And I always say, if your surgeon was, again, had education online, you would never let them do surgery on your mom or your pilot. Just said, "Oh, I just did my class on YouTube and I'm ready to fly you around the globe." You would never do that. But yet, when it
No.
comes to money and everything, everybody thinks they're an expert, and that's very dangerous. Or even it goes back to again self-analysis. We have these tests, which is good, but you really need someone caring, number one, to hold your hand and see the things that you don't see. And again, even when we do our own analysis on, again, when we go on internet, we find something, a great website, we still have those biases. We're still not really sincere with ourselves. We try to, protect ourselves. But it's good to have someone sincere come to you and say, "Listen, this is like what you're doing with your client right now. It's
Mhm.
it is a raw, real thing,
Yes,
authentic.
yes,
It's for his benefit."
that's right. Where does an hour go when you're having
Oh,
fun, Ramin?
oh,
Oh
is it?
my
Oh
gosh.
my
Like,
God.
yeah, we're going to wrap up here in a couple of minutes. So if you've been listening and if you tune in and listen on our streams, I'm Dr. Laurie Davis. You've been listening to our show, the Dr. Laurie Davis Show. My very special friend and colleague, financial expert, Ramin Modiri. And we are here every Tuesday to talk about this thing called money, which has been a taboo topic for so many people for so many years. So I met with the network yesterday. They're checking out our show today, and the new operations manager. I met with him, Ben, to get to know him, and he said, "So what's your show about?"
Mhm.
And I said, "You name it, we'll talk about it." So I said, "We talk about the hard stuff, things that people don't want to talk about." And he said, "Well, like what?" I said, "Money, sex, suicide, sexual abuse, missing people, having fun." I said, "We talk about things that people don't want to talk about." So he said, "Well, I'm definitely checking out the show." I said, "You need to do that because I'm a cross between Larry King and Barbara Walters, and they're both dead now. So that paves the way for me." I said, "So, Ramin, I just want to tell you how grateful I am for you to come
Oh, my
on and
pleasure.
every Tuesday and share your knowledge. And we'll be booking clients in for our big presentations in the fall. And so, looking forward to having more people there. And as we get ourselves out there, I'm definitely confident that's all going to happen. And it'll probably be bigger than you and I can even begin to handle. So, um, Thank you so much, everybody, and have a great rest of the day. Thank you, Ramin.
Thank you. Okay.
Appreciate you, and we'll be back tomorrow live here on the Laurie Davis Show. Bye bye.
Bye bye.